Welcome everybody to a new analysis of Tradomics. My name is Dario, and as usual, as the first week of the month, we're going to have a look at the USA indexes, the most prominent one, among which we have the Nasdaq 100, Standard & Poor's, Dow Jones, and at the end, Russell 2000. So let's start immediately with the Nasdaq 100. So according to the last video analysis, we had already some clues regarding the Nasdaq composite, because in the Nasdaq composite, we had already the breakup of this high, which then was thanks to, let's say, the triggering of the US election broke up also on the Nasdaq, with this candle occur on the 11th of November 2024. And therefore, here on the Nasdaq 100, we have the condition in which a T plus 5 has turned into a positive one. Therefore, the main direction for the future will be to the upside. In terms of future, I mean that we know, according to this duration, that a T plus 5 upward cycle that now has turned into a positive one. Therefore, as I said, the direction will be primarily on the upside, can last between 190 and 338 days. Therefore, the rally can continue for the Nasdaq until at least 190 days, which means I guess end of March. Okay, so that would be primarily the direction. Only on this channel you can have such methodology that is able on a statistical way to forecast the future direction of the price. And here we have so much time to proceed to the rally. Basically, we have time till 9 of April 2025. So this is definitely a competitive advantage that we have using this methodology. 190 days, it's the minimum, so until 9 of April 2025, but of course we can extend the rally beyond. Let's not run too much into the future, but of course we will have some pause in between, therefore some retracement to start upward cycles of greater, less than a T plus 5, but a T plus 4, a T plus 3, for example, that can cause some temporarily retracements. Okay, so this is the main direction for the mid to the long term, as we have seen until April and beyond. Let's focus more on the short term. So according to the last video analysis, we said that this T, negative T, was already enough to eventually close the weekly cycle and eventually start a new cycle with push to the upside, and therefore the candle was not broken to the downside, at least this candle. We had already 6 days to close the weekly cycle, and therefore the candle of the 30th of October and um, so the 1st of November and 2nd of November did not go lower to the candle of the 31st of October, but instead a new downward cycle was developed. This new downward cycle, as explained in the last video analysis, could have been and is a T plus 3, because now we have had already the confirmation from some level of prices that we have the swings condition, but also here the time to say this is can be definitely a T plus 3, because we have more than 13 bars over this low. So here we can update the chart. Therefore, we can put a T plus 3 here. And this one was revealed to be, I think, a T plus 1. T plus 1 of 22 bars. Okay, so here we have a T plus 1 confirmed. We said that we could have a T plus 1 or a T plus 2 eventually if they prolong it, the downtrend for another couple of days. This could have been a T plus 2, but instead we have just a weekly cycle of 6 days. Therefore, this is a T plus 1. And you can now see that this T plus 3, which can eventually be can eventually be more than a t plus 3, was divided by in the first t plus 1, the second t plus 1, and the third t plus 1. Therefore, the total sum is a t plus 3, okay? As for the last analysis here, we were predicting to have a t plus something upward cycle, but this was just um, T upward cycle that ended on this candle after 9 days. So here we can also update the chart. Here we have just a weekly upward cycle. And now from this top, we have a new at least T plus 2. Okay. We can have a T plus 2 and even more than a T plus 2 because we have at the moment 14 days under this top, and therefore this might be even more than a T plus 2. But another important thing is that um, from this top to this top, we had 10 bars. And this candle of today's candle is going towards this level of price, which is 20,998. So if today or next week we're gonna break up this high, then we will have another weekly upward cycle turn into a positive one, and therefore we might have a prosecution to the uptrend. Okay, if next week this candle, so this swing 20,998 will be broken to the upside. Okay, um, so we have to carefully monitor for the next next week um, that swing, and therefore I flag it out with an arrow so that we can remind this thing. And here we have a white color. Okay, so if we will broke up this swing by end of next week, then for the remaining time we can have uptrend. For the additional segmentation of the chart from this top to this top, we have add a T plus 2. So um, first T plus 2, second T plus 2, and now, of course, in the last video, we put just a T plus 1, but from here to here, we had 32 bars. So here we can consider this one not just a T plus 1, but a T plus 2, okay? So we can also update this. Be careful, because if we will not break this swing, this might be not just a T plus 2, but eventually a T plus 3. So therefore, we will require more time under the stop, okay? Because we will need to have some more time for eventually a T plus 3. We have already the minimum duration, but let's see during the next week whether we will have first this break, and then the second target would be at 21,182. In any case, sooner or later, we will return to this top, because as I said, the T plus 5 is now positive, and therefore we will have uptrend for at least Q1 2025. Okay, that's the situation we have on the Nasdaq. So we can switch to Standard & Poor's 500. The Standard & Poor's 500 is showing, compared to Nasdaq 100, more strength. This is something that is not revealed in this video, but since a while we are saying that the Standard & Poor's 500 is definitely stronger than the Nasdaq in this period. And as you can see here, we are having tops over tops, okay? So in the last analysis, we were saying that we could have additionally more time to close our weekly cycle. On the Nasdaq, we have had just 6 days, but here on the Standard & Poor's, we have had 8 days. So that's why I was also putting this little arrow here. So analysis correct. Nasdaq 6 days and Standard & Poor's 8 days. And therefore here the downward cycle was closed at 23 bars. Therefore here we can consider this not just a T plus 1, but a T plus 1 hybrid cycle. And with the hybrid cycle, we have the same situation as for the Nasdaq. So with the hybrid cycle, which was the third cycle, we have completed the T plus 3. First T plus 1, second T plus 1, and another T plus 1 hybrid, okay? Total duration of this T plus 3 has been of 64 days. And now from the candle made on the 1st of November, we have had a new downward cycle, which can be already a T plus 3. So basically the same situation as for the Nasdaq. T plus 3, I remember you that the T plus 3 is a 3 months downward cycle, this case, or a 3 months cycle. And the duration is between 48 to 89 days considering standard duration. And we have also the hybrid cycles that in the case of a T plus 3 is between 90 and 93 days. Regarding the T plus 2 here, we can confirm that this is a T plus 2. And now with the T plus 2 here, we have reached a total duration of 31 bars. Okay, so here the T plus 2 has reached a median duration. You already have some insights regarding the Standard & Poor's compared to the Nasdaq, and actually here we have a weekly upward cycle that has turned into a positive one, because here we have 11 days, but thanks to this today's candle we have already a new weekly cycle that is broken to the upside. So therefore, I would expect um, more push to the upside. More push to the upside, considering that this is a T plus 2, so we can eventually extend the rally until 44 bars, which means 18th of December 2024. So we are in line with the Christmas rally eventually, okay? So here we can definitely put another T plus 2. And from this top here, we have 14 days, so this one can be considered a T plus 1 upward cycle. So Standard & Poor's can confirm the trend to the upside. And for the time being here, we have a total time of 98 days. So this is not just a T plus 3, we can consider it as a T plus 4. And considering a T plus 4, we have the minimum duration of a T plus 4, but we can have also a median duration of a T plus 4 that can last. Median duration, if we take a median duration, is 123, 124 bars, so until 8th of January. But of course, we can also consider longer duration, which will go to mid of February. Yeah, mid of February, let's see, 169. Here we go till the second week of March, okay? So as said, Standard & Poor's is showing definitely more strength compared to the Nasdaq, because also in this case we have been for 47 days below this top, whilst on the Nasdaq we have broken the absolute top after at least more than 47 days. Here eventually we can consider this also as a T plus 5, even if 47 bar we are really at the limit of a T plus 2. This would be a T plus 2 hybrid cycle, I would tend to consider the stop more as a T plus 4 rather than a T plus 5, whilst on the Nasdaq seems to be more, let's say, clear that the absolute top is a T plus 5. But of course, if you want to be conservative, you can consider a degree less for the cycles in order to be more prepared in case of eventual harsh retracements. Okay, so T plus 4 here is definitely the grade of the cycle we can keep into consideration, and therefore we can expect more trend to the upside for sure, at least for mid of December. Also in line with the fact that this T plus 2 can last until 18th of December. Okay. Um, Last but not least, just for a matter of completeness, this first downward cycle has been a weekly downward cycle, total duration 11 days, and now we are on the second weekly downward cycle that potentially has closed its duration here with the candle sign on Tuesday, 26th of November. So here we can also put T slash T plus 1 with a question mark. Let's see whether this will be confirmed in the next days, because we don't have to fall down this low for another day. So we need to have time on our side to define whether this is a T or T plus 1. But this is the situation so far. Okay. So let's move now to the Dow Jones. So the situation on the Dow Jones is pretty similar to the Standard & Poor's 500. Now that the market has given us additional information, we can update the chart first as usual. So here we have at T plus 2 downward cycle of 38 days. So we can update the downward cycles. And from this low to here, we have a weekly cycle as for the Standard & Poor's 500. From this low, potentially we have not just a T plus 2, but a T plus 3. So here we can put even a T plus 3. Okay, first T, and then we are about to finish the second T. If not, that was finished on this candle. But in this case, for the Dow Jones, here we don't have the closing of the weekly cycle. I should check actually the intraday session. Potentially we have also the closing here. But the thing is that the Dow Jones is definitely stronger than Nasdaq, and I should make some calculation whether the Dow Jones can be also stronger than the Standard & Poor's 500. From a cycle perspective, another important thing is that from this top here until here, until today, we have 176 days. So 176 days as either a T plus 4H, or it's a cycle that cannot furthermore divide in T plus 4. Therefore, we have to start lowering down the grade. And this situation happens when there is a strong tendency either to the upside or to the downside. In this case, it's to the upside. So in order to have or to point our compass in a way that we can find the right, let's say, interpretation of the chart, the first thing that we can consider is that from this top that was made on the 17th of July until this candle, we have had 62 days. And here potentially we have at the closing of a T plus 2, of course, as said during the last video. But here we might have also the possibility to have a T plus 3, which is already positive one. Now, the T plus 3 turn into a positive one after 16 bars, which is really a little time. So I would tend to be more conservative and consider this as a T plus 2. But we can also bear in our mind that this can be a t plus 3. Okay, what does it mean? It means that if we consider this as a t plus 2, we have now a total duration of 33 bars. So we are heading towards a median duration of a t plus 2. After the closing of a t plus 2, there might be another t plus 2 eventually. But if we consider this as a t plus 3, then we will have a retracement, but we will return to the absolute tops, because a t plus 3 is definitely a grade that is longer compared to t plus 2. It's a 3-month cycle versus 1-month cycle. And the fact that it's longer means that we can push the price more toward the upside for a longer time, which means until at least a couple of days before Christmas. Okay, so considering this structure, I would tend to consider this as a t plus 2 and t plus 3, and this, for the time being, is the most probable way, because we have closed first t plus 3, we have closed a second t plus 3, and here we have all the condition, time and swings to say that from this candle was born a t plus 3. Okay, so I would tend to consider this one as the main or the most probable way, and therefore here we have the representation of what it might happen for the next weeks. And at the same time, I can update the chart by having here mm, the t plus 1 on this top, and t plus 2 that uh, can be closed either beginning of next week, because we have already time to finish it, or at most, and I repeat, at most 44 days, which is 16th of December. But by 16th of December, we will have a really few probabilities to proceed to the upside, or zero probability to the upside, unless there are some bear tongues, and then definitely more possibilities to retracement if the rally will be extended until 16th of December. So be careful during the next days or weeks, because here we have, as for the Standard & Poor's 500, enough time to close the T plus 2. Even if on the Standard & Poor's 500 we haven't broken up the absolute top, whilst here on the Dow Jones we have it. So therefore you can also use the Dow Jones as a reference for the Standard & Poor's. Okay. So having said that, we finished the Dow Jones, and we move to the last one, which is the small cap US index, Russell 2000. Finally, the Russell 2000 has shown what we were predicting. So here we add, as for the other indexes, the possibility to proceed a little bit more to the downside if they wanted to extend this weekly downward cycle more than 6 days. But as for the Nasdaq, this was just 6 days precisely. So here we can update the chart. As for the others on that low, we have closed a t plus 3. So here we can update here the chart as this is a t plus 3. Analysis correct, and it's not a case. So for those of you that are following this channel for a little while, I was sincere, so since July, saying that thanks to this breakup of this swing, we could have proceeded to the uptrend, and actually the Russell is going to the upside. So this is really the advantage for those that are following this channel compared to the others. So all this, let's say, retracement and signing of the lows has been potentially occasional to open long positions. Okay, and it's not actually a case that I put also this arrow here, but you can let's say you can check the previous videos because I always tend to be really transparent. And you can check already since July that I was saying that the Russell 2000 was the US index that was definitely choosing its destiny to the upside. And it was the first one over all the others. So over Standard & Poor's, over Nasdaq, and over Dow Jones. Okay. So also in this case, we can update our chart. So here for the T+2, I would say that we can consider this top as the end of the T+2. And here, after not so many days, actually, we have had uh, another cycle turn into a positive one. And of course, this is what we can expect because the rally of the Russell 2000 can proceed um, until at least 190 days, and 190 days is 27th of December at least, but we can also go definitely to Q1 2025. So here we don't have nothing particularly special. So after a retracement here, we have the first weekly upward cycle here. Then we will continue to see more push to the upside. Here I put T+2 with a little question mark because the cycle has turned into a positive after really few little days, or yeah, few days. So 10 days, not really much. So potentially when a cycle turns into a positive one after not so many days, I tend to consider it as a lower grade, like a T+1 rather than a T+2. But for a matter of, let's say, completeness, I leave this question mark. Also because when we check the duration of this T+3, here we have 81 days. So we might have a T+3 finished year plus a Bayer tongue of a weekly cycle, and then a retracement. So the tendency, of course, is to the upside, but let's be careful if eventually we will not start falling for the beginning of a T+3 or eventually a T+4. At the moment, I leave this the segmentation as such, um, but bear in mind that we can have the possibility of a Bayer tongue. And of course, Bayer tongue, unfortunately, cannot be foreseen. So if you want to know more about the Bayer tongue, you can always refer to Introduction to the T-cycle analysis. Okay, so here I also update the downward cycle. Here we have at 6 days. So Russell 2000, we have short-term cycle compared to the others. First weekly and then the second weekly, 7 days, that was negative. Okay, so also in this case we have the chart update. Okay, so be careful whether this is a Bayer tongue or not. If this is a Bayer tongue, we should start from next week to see a retracement, and the first checkpoint will be here at $2,415 $0.92. So if we start going lower the swing, then just bear in mind that from this top we can have a T+3. Otherwise, if we will continue to update the absolute tops, then here this one can be considered a T+2. Therefore, we can proceed to the uptrend without any particular, let's say, um, harsh retracement until at least 24 days, which means 13th of December 2024. So this was the last index of this video. I hope you enjoyed it, and of course I hope this was useful to manage accordingly your position. If you wanted to follow us, please subscribe to our channel, and if you would like to have some other indexes analyzed, then you can write at tradomica@gmail.com. Thanks for watching, and see you to the next episode.